Welcome back to another video today. So in today's video, I'll be doing a quick recap of the weekly trade I have taken for the past week, and also give a top-down analysis on how I leverage high time frame to find my daily bias, and then go down to a lower time frame on finding my precise entry. And then typically just follow these 3 simple steps. Is I only look at a higher time frame, so that will be my key point of interest where I want to see some reaction. I expect some sort of reaction to continue a momentum or a reversal, so a reversal momentum, and then I look down to the second part is some sort of market structure shift for confirmation, so we don't ever guess where the price is going and just try to short the high or try to grab the low, because that will be catching a falling knife. We always let the institution, the big whales, to show their hand first, and then we follow the momentum, and those big sell order or buy order come in. And then later on, when we go down into, once we found some sort of market structure shift between 30 to 15 minutes, I look for some sort of PD array in the 5 minutes, leveraging volume profile to please what I use since they're more precise, and also footprint chart. Okay, so now let's dive right into here. So I'll just keep this up here so as a key reminder on what I typically look for. So currently I'm looking at a 4-hour time frame chart. So you can see what we're looking for. I highlight over here. There is a order block that was formed during the previous week. So Monday through Thursday, there is a key order block at the bottom. You can see on Thursday, all these wicks happen to it. And also there is a liquidity grab from Ola's side on the bottom of these equal lows, and then went back up. So what I'm looking for is I want to see there is we see some sort of market structure shift in the higher time frame. So I want to see if it's going to have a momentum continue lower, right? And then at the same time, we also want to see if since this is holding on Thursday, I don't know we're going to break through it. Okay. So one thing I'll highlight into here in the pre-market, I want to see if the zone is going to be bouncing between from this zone to this zone, right, which it did. And I want to see if it's going to either break out or it's going to go lower, right? So either it's going to go lower. Okay. So I want to see either it go up in this direction or continue lower once it reject this zone. On this day, it did reject on what we see here. So typically in the higher time frame, once it tap into these key value zone, and then you can kind of take a look using your order flow, or if you leverage this volume profile, you can take a chart from here Monday through Thursday to the pre-market of Friday. You can see you have the point of control listing here. So these are the most traded volume price level over here. So these are key volume, and also you have a heavy key volume down here, so which makes sense, right? So these 2 key zones that we have highlighted, the price will be bouncing in between until it breaks out. Right, so on these type of days, we're still in range. So something you keep in mind when we come in day, we had to keep in mind we might be ranging for these days. We might get a breakout. So it could have a choppy day, but this is a big zone enough, so you can still get a decent amount of win of for your entry. So what we take a look is we can see jump into candle theory. So if you're not candle theory, this is a bearish engulfing candle. What bearish engulfing candle means, there is an uptrend candle, and then this is a downtrend down closing candle, right? Up close candle, down close candle for the blue. And you can see what does this mean. Within the same candle, there is in the smart money concept or ICT, you have a liquidity sweep or stop raid, and then you also have a market structure shift that happened all within one single candle. So let's jump into that. Let me highlight this first. So this is the 4-hour high. This is the 4-hour low for this candle, right? So we just mark it here. Then we jump down to 30 minutes. We can clearly see, let me extend this. You can clearly see this is a sweep that happened, right? So this is the high previous candle. This got swept. So let me mark that. This got swept. And then there is a market structure shift over here, right? There's a clear market structure shift. And this basically check our criteria, right? We have a 4 to 1 hour higher time frame. So I was looking at 4 hour, a key interest over here, a large sell order that's sitting here. So if you look at your footprint chart, if you go back, you'll see a lot of selling pressure up top that shows up, and also there's iceberg order as well. So here you can see there's a sell pressures come in, and then once the market opened at 9:30, it dove straight down, market structure shift. what we want to look for now is I'll typically jump into 5-minute chart. Once you jump in 5-minute chart, I want to see it rebalance into some sort of entry in the lower PD array that I can enter. So if you take a look at volume profile over here, right, you can see this is the point of control at the bottom. We go outside. There's a low volume nodes here, which will line up over here. So low volume nodes, if there's other videos you want to understand how we can trade this concept, take a look at my previous video on volume profile. So, but low volume node essentially are imbalance order area where order that got moved too fast. So in this case, move down too fast, we'll go back up and fill these imbalances. So those sell side imbalances and continue lower, right? If it does want to continue, if it doesn't want to continue lower, it should not hesitate over here. It should just go right through it. Okay, so in this case, it fills imbalance order, and then also you can use, if you use different PD array, right? So you have OT, this is above 50%. So I typically only look for trade if you're shorting in the premium zone, and if you're long, I'll look for in the discount zone. So once it tap into here, this will be my entry at this short. So my precise entry was here at the low volume nodes, and then your stop will be outside here. And you can leverage higher time frame as well to find a order balance. So typically I put it outside of decent balance a little bit further. You don't have to put it that far, but sometimes it does wick out a little bit. So I like to keep my risk a little bit bigger, but I know this entry will go all the way down to fill this, right? Fill this gap here. Since we know we're ranging, as we had it before in the higher time frame, right? Going back to 4 hours. Let me move this. We know we are in the ranging, so if it is rejected, it will go down and tap back into the zone. Not necessarily go all the way to the low here, which I don't. If you target this as low, probably didn't get filled on this day. I typically just target at the key interest zone, which there is a large order over here. So like again, if you take the volume profile, there is a large order here to go through all these buying pressure. Sometimes it won't go through, right? Sometimes it does, then it will run very, very quick. But in this day, you can see it bounce. So my stop is at here, target a low. This give you a 2.4 RR, right? You don't have to target all the way down here. I didn't target all the way down here. I target into here, and then a little bit you can trace as your runner, but I close everything out at here. So there's a 2.4 RR trade, even with a 66 points risk. Okay, so this is it for on Friday. Now let's jump back into Thursday, Monday, and let's run through this as well. But too quick. So on Monday, once it open, this is the gap, new opening gap. So you can see there's a new opening gap, and then we can see last week it continued to respect this zone over here. So let me jump back into here a little bit, so we don't have to take a look on Tuesday yet. So this is Monday. We can see it's respecting the zone. Okay. At the same time, there is a new order flow, order block that was formed here. So I highlight through here, aligning with this order block. So, and also there's this key zone also remain, right? These zone, we'll wait until to see if it's gonna continue to range. So we still are ranging right now. So on Friday, we're still ranging. Went back up, didn't break through. We're still ranging. We want to see if we can get some sort of entry up here, either to continue upwards to break this trend. But if we want it to do so, it needs to have some sort of candle closure above this order block. So with all this opening, we can see there is no no candle closure, body closure outside of this. It's just wick. So it shows us that this is not ready to go up yet, and most likely it's going to have to rotate lower and then grab more liquidity before running higher. So if we go down to 30 minutes, so we can see again. In the 30 minutes, there is a very obvious market structure shift over here. So let me highlight this as well. So same thing. Let me just use this. So more. This is 4 hour, right? And then this is the low. Okay. Now let me go down to. You can even go on the 15 minutes, 30 minutes, 15 minutes. Doesn't really matter. You can see once it's a query sweep, huge sweep. There is a shift. Changing state of delivery or market structure shift, depending which one you use, doesn't matter. There's a shift here. My entry was at this zone. So my short entry was this tick. Once it broke out and tapped back in, this is my entry, and my stop is outside this imbalance as well. So 70 point, and then my target is at this low, aligning into the 4 hour low and also at the same time aligning with the key interest of 4-hour time frame. So this is why I don't aim for home run, because these type of zone, like these state, it did go through, but in this state it didn't, right? It literally wicked it, tapped this, and then continue back up. Even though you probably won't get a stop out in this trade either way if you do hold, but if you move your stuff to break even, you will have end up being a break even day. But in this day, this is a 1.7, 1.8 RR trade, which is still good enough. It's a high conviction trade, but the risk is a little bit bigger. But I always like to give myself a little bit more cushion. Sometimes the wick is unexpected, and I don't like to re-enter trade. If I tap back in, I would rather add into my size and pyramid end to end instead of getting in and out. Okay. And then you can also try to enter at this zone here once you tap back in. So this also align with OTE if you want to tap back in. I typically don't trade after 11, so this is going to 1, so there's no trade for me here. Right. Jump in, moving on to Tuesday. So Tuesday, remember, break right through it. So on Tuesday, we can see this is what we're waiting for to show us the direction. So basically, this set the tone for rest of the. This sets the tone for rest of the week. Once Tuesday came, this zone that has been holding over here. So this zone that has been holding throughout 1 day, 2 day, 3 day, 4 day. Once this break, we can pretty much certain say we're going lower to fill this gap, right? So on Tuesday, we did end up filling gap, but there's something I see a lot of posts online on X. A lot of people didn't profit on Tuesday, but it was an easy trading day. Is when they try to short to fill this gap, right? So we, like I said before, when we take a look into here, we want to see in the higher time frame what the price is doing. We can see from 2 to 6 o'clock Eastern time, New York time. This did not break out. This type of candle was huge wick. It means the price is not ready, right? It's respecting the zone, right? It tapped into almost 50% of the zone and then rebalance back. So we want to see if the price is going to go back up, tap into this breaker block, and then before moving lower, right? So we can take a look to see if there's some sort of trade we can either short into this breaker block or some sort of trade for continuation lower. But before, if we want to short into the continuation, we need to make sure there is a clear market structure shift. So jump into 30 minutes, we can already see once market open, this is not a good trade to take, either for both short and long. There's really no trade. So if you try to short, let's say into here, order block, and then target for this low, and you stop this at this high, you will have got stopped out. Even though this is a 2.5 hour trade, you got stopped out. Once again, there's no liquidity sweep at all in the higher time frame. So if you take a look at higher time frame, there is no liquidity sweep at all whatsoever. And then if you want to long here, you could, but at the same time, if you take a look at 30, let's say 15 minutes, go down a little bit lower. If we try to long here on this day, stop at this low and then target at this high, you will also have been stopped out, right? So on this day, it's better just to stay put and then see, wait until the price actually reach into the zone to look for a short entry or for a continuation lower. So on this day, the trade didn't really come until around here. So there is a market structure shift over here at this candle. So if you take a look at 30 minutes, it's easier to see. This candle is the market structure shift, the true market structure shift. But then if you go down to lower time frame, right? So if you go down to 5 minutes, your risk and reward is not that great, to be honest. So you can put your risk, let's say, into here. Once you tap back into here, and then you stop this high, and then you target what, like 2 hours, it didn't reach, right? At the end of the day, when it closes, it's only one RR trade. If you hold all the way down to pre-market, typically I don't do that. If you do, great, this trade worked out for you. But one, I don't try to trade past 11:30, and also I don't trade post market hour. So this day there's not much trade that's clear to take, just to follow our rules, right? So going back to our rules, we look for some sort of key interest at 4 hour, 1 hour. From here, we can either look for a long entry trade, or a short entry trade up top here. Once you tap into this key zone, and you can see this, there's also a 4-hour fair value gap. Okay, jumping into, this is Wednesday. Okay, so Wednesday, leveraging this 4-hour fair value gap, this is what we used. Okay, and then we did get a clear break, so this is no longer valid. It already got filled, right? And then we have these fair value gap that's open. So go back into, not looking at Thursday, so just Wednesday. The Wednesday itself, we can see there is some sort of order block that's over here, and then there is a liquidity sweep at bottom here. So if you take a look at this 4-hour, so let me, this is the 4-hour low, and this is the 4-hour high. And then we can zoom into 15 minutes on the lower time frame, right? We can see, even if you look into 1 hour, these equal lows. It's easier to see in 30 minutes and 15 minutes. These equal lows are the sweep, and then the 4-hour, this little wick here is the sweep, because this candle closed at 6, and then the new candle opened at 6. So this is the sweep that's valid. And once there is a market structure shift closing outside this 4-hour candle, we can look for a long entry here. So your entry could be, so going to 30 minutes, leveraging this order block here. Okay, and then something I'll show you on this day. Very, very, very simple and precise. If you take a look using your volume profile, this high, look at this, how beautiful this is. This low volume nodes, let me highlight it into red so it's clear. This low volume nodes will be your entry, right? This is where I enter. These equal low also get internal liquidity got sweep as well. So it's all fractal. So you have a bigger picture got sweep. You look for internal sweep as well, and then you target 2RR. So we can target the weekly high. So this is this yellow line, this weekly low. Sorry, previous weekly low. We can target this, and this will be our 2RR trade. And then obviously to go all the way to this high key level, this can be a 3-hour trade and never tap into this high. So this can be between a 2 to 3-hour trade. That's up to you. I just close everything out at the weekly low. Okay. This one's very easy. So jump into Thursday. So Thursday, we can see continue respecting this 4-hour fair value gap as a key zone, which is great. Now we want to take a look on some sort of a market structure shift. So we can see same thing, this 4-hour high, that sweep, and then this is the 4-hour, oops, this is the right one. This is a 4-hour low. Okay, then we jump into 15 minutes in the lower time frame. Liquidity sweep at this high, and then there is a market structure shift. At least equal low. Once this is shift, you can enter here, and then you target for this low. So there's relatively equal low here, and then where you can target. So if you go to the 4-hour time frame, you can target for this low, right? So this is the low where you can target the equilibrium of this whole move displacement. So around here somewhere. Okay, so on this day, the Thursday is pretty straightforward as well. As we mentioned before, once this break, this sets a momentum that we want to ideally look for a short entry, if it makes sense, because these are momentum and it will go quick. You can see how quick the candle, how big the move is. And same here, there's the bearish engulfing candle as well. So, and then jumping into, let me just close this out. So this is the last day. The last day is a very, very easy trade, but sadly, I didn't take any trade due to the trade didn't come before 11. It came, I think, close to near the closing time. I think it was around 1:30 or 2. We can take a look. So this is the key zone that I was looking for. There's a order block here. And then if you look at 12 minutes, so we're kind of in the zone where we're near the end of rebalancing price. So this whole leg, we're already past the midpoint. Right, so we're already in the OT zone. So I'm expecting to some sort of retracement back. And you can see here, we have a huge imbalances over here. So you have this is 12-hour imbalances, and you have these candle as well. you can see these are huge imbalances I'm looking for. That I was looking for. This is the 4 hour. You can see how beautiful it bounced into and then respected, right? And this is respected when you have such a downtrend at such a fast pace with no stopping or rebalance. It has to rebalance at some point, right? No stocks will keep going. So, and this is in the OT zone in the higher time frame as well. So if we jump into the 15 minutes, this is what I was looking for. I want to look for some sort of trade, to be honest, at this open here. Once it tap into here, I want to see some sort of break into above. So right, this is the 15 minutes. We're even looking to the 5 minutes. There is just no market structure break at all. So you're looking at the 5 in the first zone was at this low, right? So this was the low I was looking at. And then this is the 4 hour high that I was looking at. I want to target to trade, but it didn't give me that entry. So these orange line, right? Once tap in here, I want to see some sort of market structure shift. So there is a fair value gap over here. I want to turn on inversions and also break some sort of market structure above here. I want to wait for that. It never came. It came moving lower, and once it passed 11:30, I just didn't bother. I don't trade that time. Typically, I don't have any stats that time, so I don't trade past that time. But this is a very easy, straightforward trade. Once there's a market structure shift down here, right? Some people can view this as a market structure shift at this leg over here or here. I like to wait until there's a clear, so I'll be at this candle. So I'll use this. So if you go down to 5 minutes, you can see some people will use this as a market structure shift, but I don't like to do so. I want to wait until there's a little bit higher up, so there's a fractal within the fractal. So you can see the higher time frame, there is a market structure shift over here. There's a clear market structure shift, and then within that market structure shift, I want to see another market structure shift. So we'll be at this candle around, happened at 1. So yeah, happened at 1, close to 110, right? Yeah, 110. That will be my entry if I do take this trade. And then my target will be at this high. So this is very simple. This is also candle theory. Typically, right, you can even use this. So let me use this as 50%. And this, let me mark it out. So this will be the midpoint of 4 hour. Just mark this. So typically, let me go down to 5 minutes. When you have a shift in momentum, so here, once this is shift and we know the price is going up, right? So once this structure break also align with this trend, you can see the price will always aim towards the 4 hour candle. So what I mean by that, so what we marked out here, this 4 hour candle, right? The 6 o'clock 4 hour candle. Once this low is broken, so let me move this a little bit lower. This candle wants to sweep it. You can see the sweep. Typically how candle form is, it will always fill this midpoint all the way to the midpoint. If we want to go lower, it will fill the midpoint at least, consequential encroachment, and then go all the way down, continue lower. If not, it will go all the way to the 4 hour high. So it will fill all the way to the 4 hour high. So, and you can see it did that beautifully. So going back to 15 minutes, once there's a shift, clear shift, continue all the way to the 4 hour, the midpoint, hesitate a little bit, the price could accumulate a bit, and then once you can see the 4 hour, the midpoint hold, 80% of the time is going to fill all the way to the 4 hour high, so it'll be this high. Okay. So that's kind of the rundown of this week top-down analysis on using my typical just 3-step simple higher time frame, 4 hour to 1 hour minimum, or even 12 hour. Sometimes I do that. In this case, I do have to go 12 hour. There's nothing to 4 hour you can even map out here. At least find a key interest zone to see what to expect, either to continue or continue to respect that zone of buying pressures, and then match that with footprint chart as well. So something, as I showed before, you can use this. You can see from here, there's a lot of pressure at the buy, at the sell side. You can know where that zone match up with what you draw, instead of just blind drawing every fair value gap or order block. Do use it with volume profiles or footprint chart to see where those heavy order actually sits on buy side and sell side. And you can expect to definitely see some sort of reaction, either the seller get absorbed, buyer get absorbed, or vice versa, right? And then later on, you don't go to lower time frame. 30 to 50 minutes is what I recommend. for market structure shift. Once there's market structure shift, then you look for PD array. The last part is the least important part. So a lot of new traders come in here, they focus on finding the PD arrays, drawing out every single fair value gap in the 1 minute, 2 minutes. That's I would say you will get stopped out a lot of time. Typically on my trade, I only take maximum 2 trades a day. So once I take 1 trade, if it doesn't work, I will take the second trade. If that second trade doesn't work, most likely the case, today is not a market for my strategy for condition wise, so I don't trade anymore, so prevent me from tilting. And then if I take the first trade, it's a win, and I just close the day. It's as simple as that. You try to make 1 good trade a day. That's your goal, right? And that 1 good trade is following your rule. This is my rule. It's very, very simple. 3 steps, right? PD array, volume profile for entries. These are very simple for entry, but these are the least concern you have. The most important you need to prioritize is your higher time frame bias, which will give you your daily bias, and then knowing when's the market structure shift happening once you have the higher time frame confirmed. So like in this case, this is the cleanest one, right? We have a clear market structure shift, right, on this day. Once a key tap into the key zone higher time frame, and then you have clear market structure shift, and then you look for some sort of PD array. Same thing as here, right? Key zone, market structure shift, PD array. Key zone, market structure, PD array. Key zone, market structure shift, PD array, or changing state array, whichever you prefer. Same thing as here as well. This day, key zone, market structure shift, entry, but there's no entry here for this on Thursday. And then on Friday, I didn't take the trade, but same thing. Key zone, right? You don't take any of these trades and don't FOMO into try to short. Key zone, and then market structure shift, and PD array. This is my strategy and bread and butter. If you have a different strategy, that's fine as well. As long as you follow those exact plan and structures, you can be profitable. All right, that'll be all for today. Stay safe and happy trading.